impact of the global spread of COVID-19 has heightened market risk aversion in ways not seen since the global financial crisis of 2008. How does this financial market disruption affect our daily lives? The effects of the COVID-19 crisis has caused tremendous disruptions across many financial markets. Now, how do we rise up from this calamity? We have with us our experts today with us to shed some light on the financial market disruption. Welcome to the economic impact of the pandemic. Today on the show, we have with us our experts, Dr. Muhammad Muhaiza Musa and Associate Professor, Dr. Ahmad Razman Abdul Latif. Thank you for joining us on the show. We are diving right into the financial market disruption today, and we are talking about the businesses that are reduced or temporarily closed operations. And this has actually caused a lot of tension among the public, right? We had about 70% of businesses temporarily closed down during the first 2 months of the pandemic. So what do you think, in your opinion, what sort of constraints led to this shutdown?
Thank you, Saline.
Yes.
Well, we have seen since the early 2020, when the government decided to impose a movement control order, and what come with it is the closing of many or even major economic sectors, and also the restriction of movement for the people, even for the businesses to come up with their normal activities. And when we look into this imposition of lockdown as well as the movement restriction, definitely the businesses, they are affected.
Yes.
And because of that, they could not generate the normal revenue, resume the normal operation. And this caused certain factors that will have a long-term impact, not just on the businesses themselves, but for the stakeholders, those who depending on these businesses, like the workers, the community, even the government, through the generation of a tax duty income. And when we look into this, the reason when this become very prevalent or problematic is that once the business shut down, they cannot do their business. The main thing that happened is the impact on the liquidity.
Yeah.
It's not that the money simply vanish out into the thin air, but the money now is being kept by the people, by those who doesn't want to spend because they cannot. First, they cannot spend it because the economic sector will close down.
Right.
But some also, they were not confident in spending it. They said, what's going to happen in the future? We don't want to run out of money, so we better save it. When liquidity drain out, okay, then you don't have this transaction. So you don't have the exchange of product and services. And this definitely affected the economic growth. Everything become slow, and even the government also now being affected. They cannot get enough income through the taxation because people simply do not spend. Right. So this is what we can observe when the pandemic started, when such imposition, the lockdown has been implemented. The consequence is it affects the liquidity of the market, and of course, it went downhill for some of these businesses.
Yes, thank you. And what's your take on this, Doctor?
Well, what I view is that the pandemic have brought a lot of both positive and negative side.
Yes.
Of course, the negative side is that a lot of businesses have to close down due to the lockdown. However, these have given an opportunity for businesses to reconsider their business model. So we are seeing recovery in the economy, but not very fast. And consumer confidence is getting back. But when we look forward after the pandemic, we have to look into the new norms of business, how we can attract new investors to put the economy back in the real path.
The right track.
Yeah, the right track.
Through the pandemic, right, we have seen that many countries have been experiencing financial turmoil, right, where many investors have shunned away and from this equity and bond markets. Are they skeptical about the business landscape, like the sustainability aspect, or could there be any other factors?
Yes, indeed. What we have experienced, especially during the first year of pandemic in 2020, majority of the countries, they experienced a negative growth for their GDP. With the exception of few, I think even in Southeast Asia, we can only have like Vietnam still registering positive, China, but the rest, for us, even Malaysia, we were experiencing negative growth. And now in when we look into 2021 also, we started to see some improvement among many countries. Singapore recently unofficially declared that they have registered like 7% growth. 7%. For Malaysia, we expect to have a positive growth and even a higher growth maybe in 2022. But then some of these countries, they still not be able to recover fast enough. We have seen, I think Sri Lanka at the moment is facing major liquidity crisis. They have difficulties in paying back their government bond. And because of that, when we look into each and every of these countries, we want to understand what causes some of these countries to recover fast and why some countries still sluggish in terms of the recovery process. And we can say that some of the factors are beyond the control. I mean, like we have seen emergence of many variants, especially Omicron now has caused many countries to started to consider whether they want to keep opening their border or resume their economic activities or now closing down. But at the same time, we notice that some countries, they manage to overcome this through their strength of their financial services. For example, when I mentioned Singapore, so they are the hub of financial services in Asia, in Southeast Asia especially, and they managed to ride this calamity by emerging stronger. And when we look into this fact, that it's not about just simply trying to resume the business as usual or trying to continue with the existing economy, but we have seen, like Dr. Mohazam said, some of the opportunity that we have discovered during this pandemic is to venture into new economy. We have seen our country has started to focus on digital economy, but I think we have something that could be a game changer. We have become one of the top Islamic financial service provider. And imagine if we combine this with technology. So there's an opportunity that we can utilize to make sure we are more resilient and we become a very sustainable as well as the nation of producer rather than the consumer. So this is what I can see.
You are watching the economic impact of the pandemic and we are discussing about the financial market disruption. We'll be back after a short commercial break to discuss further. Welcome back. We are watching the financial market disruption and we have our guest speakers here discussing about the financial disruption globally, and as well we are now zooming into Malaysian context. So we are looking at the Malaysian stock market, which is among the most hit sectors, right? So we are talking about KLCI especially. It doesn't look very encouraging. So Malaysia's stock market is diversified and we control about 60% of the glove market, Prof. So yet, why is it that our stock market is not growing? So can you please explain about this?
Well, when we look into the early 2020, when the pandemic started and business has been forced to shut down, and that including Genting. And what happened when people got nothing else to do, so they decided to jump into the stock market. And when I did my research, right after the lockdown, the volume of stock trading in Bursa Malaysia has gone up, very active. And especially when talking about the glove shares.
Yes.
So they are doing very well, and the share price also gone up. But then, since then, throughout 2021, we have seen that the market, the stock market indeed has been very volatile.
Yes.
In fact, when I look into the performance of KSCI's beginning of 2021 until the end of 2021, nothing much changed. And in fact, it's registering a negative. At that time, I think -7%. So people were wondering, how is it so? When we are supposed to be recovering from 2020, 2021 is supposed to be the recovery year, and 2022 should be where we should be at the before the pre-pandemic. But then when we look into the profile of the KSCI index itself, it's consisted of the top 30 companies. Of course, some of the glove company is one of these index. And but then it's also consisted of financial companies and major companies that have government link or invested by the government institution and in government investment institution. And when we look into the composition of the investors, who actually purchased the shares in Bursa Malaysia, the foreigners actually has been selling the shares.
Right.
In fact, we are now registering the lowest percentage of foreigners, about 15 to 16%.
Right.
So they are not really interested in trading in our local stock market. So what left now? Just the local retailers and the government investment institution. So this caused such instability, the volatility that doesn't really make our stock market performing, because the factors, the main factors I can see is that first, we need stability, not just in handling the health crisis, not just improving on our economic performance, but more importantly also the political stability.
Yes.
What we have experienced since the pandemic, we have seen government change twice.
Yes.
And this doesn't bode well for the investors, especially the foreign, because the policy could change. We have seen the delay of certain implementation of, in fact, the Malaysian plan, to have Malaysian plan also have been delayed.
Yeah.
So that's the reason when we look into the performance, the investors really look for the stability in many areas.
Yeah.
And think once we have managed to achieve that, then we can see some improvement in the stock market.
Great perspective, Doctor. Thank you so much. I think talking about that, we have to talk about mitigating the crisis. Right. Moving forward, I think how can we have seen this scenario where banks could have actually been assisted by the government, right? However, we did not see this happening. We witnessed that banks selling their securities and all this. So how do you think we could have been, we could have implemented this situation, this liquidity shortage?
Thank you for the question. I believe that the main purpose for helping any banks during the economic crisis is to ensure that the banks remain robust. Right? And it's also for the central bank to ensure that there are enough sufficient support in terms of liquidity, in the monetary policy. So when considering whether or not the central bank needs to intervene to help banks if they are having problem, we have to take into consideration the purpose for any central bank to inject liquidity to any banks is not a good indicator.
Right.
Because if they are central banks that are helping to provide cash or funds instead of injecting their money in the monetary policy.
I see.
For example, like it will be a negative impact to the nation because when central banks are putting money to help other banks to survive, it will give something, a sort of indicator for the investor, saying that the banks have to be safe. Whereas the banks right now, they have ample of assets to support their business during the pandemic.
I see.
Yeah.
Okay.
So
Thank
we
you so
have
much.
to,
But yeah,
we have to look at the role of the central bank as lender of last resort, which means it will be the least of places for central bank to intervene the market.
Okay. Right. But talking about that, I think, can you please explain to us, is there a safe haven for the investors in this current crisis that we are facing?
Well, as an investor who looks into risk mitigation in their investment, of course, there are a lot of places where investor can put their money at a better place. For example, maybe they could put their money in commodity like gold, etc. But looking at what happened to the during the pandemic, a lot of markets are not looking well, especially those manufacturing, even people like what Prof. Azman said, investors are very, not keen to invest. They put their money somewhere. So previously, there were safe havens places, for example, in the global bond market or in markets, money market, like Japan is a good safe haven place for investors to go when there are a situation where there is economic slowdown. But the pandemic have affected globally.
Yes.
So everyone is precautious. The only thing that remains sustainable is places like there are still banks operating, so people put their money in banks.
Okay. Looking at our recovery pace, right, Doctor? So how do you think other investors, or when do you think other investors, especially which country, can be attracted to Malaysia to invest?
Okay. Looking at the current situation of the recovery in the global scenario, we are looking at there are investors that keen to invest in the emerging markets,
right?
Like Malaysia, because why? The main important factor to attract investors is that our economy are slowly recovering. Businesses are opening up.
Yes.
Government are spending in projects, building up the economy. That's very important.
Yes.
So, of course, the hedge funds and any other investors outside will be looking at diversification.
Definitely.
Even though that we are hearing that the United States Central Bank, the Federal Reserve, are going to increase their Fed fund rates in the consecutive months. Many hikes from the Bank of England and etc., the developed countries. But these hedge funds and investors, they would look into diversification. And Malaysia could provide the avenue because, as what Prof. Aiman said, we are the Islamic finance hub.
Yes.
It's very crucial that we must support that our markets have to be robust. That's the first thing. Our central bank have to work hard to ensure that the economy remains stable and fundamentally sound.
Yes.
So that investors would be confident and let the market remains open. That's very important. If they close down the market, it will be another pandemic.
In for a short commercial break, we'll be back to discuss further on the Islamic finance. Welcome back. We are watching economic impact of the pandemic, and we have been discussing about the crisis mitigation. Right, Doctor, we have been talking about this Islamic finance, right? So we have heard it widely that Islamic finance is robust. And how does this Islamic financing play its role in our pandemic recovery?
Okay. When looking at the economy going forward, we can see that Malaysia is a good, attractive Islamic finance hub because there will be a lot of opportunity for the country to move into what we call green financing.
Yes.
Because in Islamic finance, it is based on asset-backed project, asset-backed securities, and looking in the global economic going forward, a lot of countries are devoting into green projects.
Right.
For example, solar panels, where we'll be looking at zero carbon emission, and with the recent COP 2030 meetings held in Scotland. So when looking at Malaysia opportunity, Islamic finance is going to be flourish because we can give opportunity for investor to invest in this kind of securities, especially green financing. That's my opinion.
Right. Okay, so you're saying that we have this unique trait that's attracting people for great Islamic financing.
Correct.
Right. Moving forward, Doctor, we have witnessed that investors' confidence eroded, right? Why Islamic finance were not able to attract them, if what we are referring to Doctor's point just now. So how could we have revived our financial position?
Yes, when we talk about the conventional financing, the Islamic financing, people are probably wondering what exactly the difference between these two. And I do agree that when we talk about Islamic financing, there must be some niche or value added to the financing that will make it more robust, resilient, especially when pandemic happen. And we notice that also the case. They have a greater fundamental to protect them from unnecessary liquidation of their asset, because it's an asset back. But then during this pandemic, I noticed we somehow miss the opportunity for the Islamic financing to becoming more attractive to the investors. For example, when we look into how the banks, especially the commercial banks, be helping the businesses and the individuals, the household, to recover from the pandemic, from the crisis, somehow the measures that have been taken by the bank almost similar between the conventional and Islamic. We have seen the moratorium were given, the restructuring. In fact, they are making similar profit, meaning people cannot see the difference. The profit before tax made by the 9 commercial banks listed in the Bursa Malaysia before the pandemic, about 35 billion. During this pandemic, 2020, they're still making profit, 26 billion. But somehow, the missed opportunity that I can see here is that what if the Islamic bank could do beyond giving the moratorium? Is there some form of debt jubilee, or is there any form of restructuring the financing of businesses towards more equity financing? Okay, because we notice this is what Bank Negara Malaysia is going to do in 2022. They're going to go towards hybrid financing. And in fact, in budget 2022, there is more opportunity for the businesses to switch from pure debt financing towards equity through the equity crowdfunding, even to the hybrid, where they have a mix of debt and equity financing, which I think will be gearing more towards the Islamic financing.
So you're positive that it can definitely attract more investors in the future?
Because we have this something that are not available in around the world, but maybe in the Middle East we have that kind of product, but people realize now, when they suffer from the crisis, when they are depending 100% on debt financing, that's it. No matter what, no matter whether they are having a revenue or not, they have to pay. But if they have some form of alternative financing like equity financing, then at least they will be able to remain in business even after the pandemic.
Okay.
Let me add on a little bit.
Yes.
When we look at how the Islamic finance can put financing better than the conventional part, we look at how the innovation that can happen in the area of fintech, where it is not going to be just debt-based, it is going to be asset-based performance, as what I mentioned about the Islamic finance. So when we look at going forward, we want the economy driven by innovation, and Islamic finance is the innovation in Malaysia, because we are actually one of the country that leads Islamic finance and still leading, because we are providing Malaysian is supporting the innovation, for example, financial apps,
Right.
e-wallets, and etc.
The current economic recession, right, is witnessing long-term impacts. So we are looking at reduction of sourcing options, volatility of material price, and so on. So could you please shed some light on this?
I want to start with a situation that happened not only in Malaysia, but across the world, across the globe, which is the problem for manufacturers
Right.
to acquire adequate supply,
Right.
which is supply chain disruption.
Yes.
And this has brought a lot of impact on how a country can move the situation of recovery faster.
Right.
For example, when we look at how China is emphasizing on the zero COVID policy, it has closed the supply chain from China because a lot of factories in China have to close down in order to ensure that
Yes.
COVID remains zero. So a lot of imports are coming from that country, Malaysia, importing goods from China and United States. So this situation has caused business disruption,
Definitely. Yes.
and we have to look at alternative places to source the goods. However, it's become a huge impact to look at alternative, and it has raised the cost of fund,
Yes.
and it has disrupted economy in looking at how the people can pay lesser
Right.
during this pandemic time.
So we are talking about mitigating the crisis, right? So can we just move on to look at how the demand of USD caused ringgit to be suppressed, right? So therefore, Malaysia had to spend more, like what you just said, Doctor. So what do we need to do to enhance ringgit's value?
Okay, at first thing, as I mentioned before, is that the central bank have to ensure that the financial market remains robust, and that all the policy in terms of monetary policy, fiscal policy can be implemented without a problem. And this will, of course, will give a certain response from the market. Because when we look at the current situation where huge hikes in prices have make the inflation,
Yes.
cause the consumer have to pay more because of the supply chain disruption,
Absolutely.
right?
Yeah.
So of course, in order to mitigate that situation, we have to allow central bank to play their role.
Right.
For example, in order to curb further inflation rate, of course, they have to make certain interest rate decision in order to control the inflation rate to lower. But this is not a situation in Malaysia only.
Right.
It is happening across
Globally.
the world, United States. One more thing is that the central bank have to ensure that they have to indicate to the investors, because the word of regulators is important, whether they are convincing the investors or they are decreasing investors' confidence. A certain word by the regulators can change the economy. So that's very important.
Okay, I think we will take a short breather and we'll continue discussing more about financial crisis, the great financial crisis, and if we can compare this to the current crisis. Be right back. You are watching the economic impact of the pandemic, and we are discussing the financial market disruption. We'll be right back. Welcome back. You are watching the economic impact of the pandemic. So moving forward, Doctor, most countries been affected by this crisis, including Malaysia, of course. But when we're looking at Vietnam, right, it's quite resilient. So could you please explain why is that so? And as emerging market, why is Malaysia's projection lower compared to other developed countries?
Yes, when we're talking about other countries' performance, Vietnam, even Indonesia, other countries, Singapore as well, first we need to make sure we are comparing like to like, apple to apple. I think we are comparing to apple to durian here. And when we're talking about specifically Vietnam, even though they are registering positive growth even during this pandemic, and we noticed they have been receiving lots of investment, but the situation in Vietnam is not comparable to what has happening in Malaysia. I think they are like Malaysia in the 80s, where they still can offer a cheap labor, they can still have a vast of land to offer to the investors, and we definitely cannot compete, and we shouldn't compare Vietnam and Malaysia right now, because they have these advantages of cheap labor and cheap land. And of course, the growth can be seen as a phenomenal. But then people probably will be asking about us. If we cannot compare to Vietnam, what is wrong with Malaysia? Well, when we want to say whether Malaysia is lagging in terms of performance or investment, well, we have to look or compare with other countries that in similar situation with us. So we are actually in between Vietnam and Singapore, where we need to start to transition into a high value sector. Of course, we used to be a commodity producer country, then we transitioned into a manufacturing. We used to export lots of electrical components until now, but now financial services sector has dominated. But then we have yet to reach the level of Singapore, where even though they are such a tiny country with no natural resources, but when it comes to the center of referral for financial services, they are still there. So we need to focus more on the human capital, where we will be able to offer highly skilled workers like what Singapore has done, or attract the best talent from the region. And if we can do that, then we can become better than Singapore, because we have more land, even though it's expensive than Indonesia or Vietnam. But what we're offering is not simply setting up factory, but what we're offering is offering to open up regional headquarters for financial services, which is actually what MITI are also trying to do when they want to attract the new FDI, foreign direct investment. So we don't want any new investment in form of just setting up a factory and in the end the factory just employ foreign workers because it's cheaper than local and there's no transfer of technology. This is what we want anymore. What we want is actually where we can collaborate. We have a joint venture with innovator, developer of new technology, and market and commercialize together. That's why when people look at Indonesia, they managed to attract lots of investors to set up electric vehicle battery. But we don't have to worry, because we are focusing on the other component of the electric vehicle, the autonomous driving. We already set up, I think, a new facility in Cyberjaya for that. So this is actually what we should focusing on, the high end of the technology, so that the strengths coming from the human capital rather than the natural resources.
Brilliantly said. I think it was a very practical way forward, right? And when we're looking at this recovery, right, with the all the limitations that we have just discussed, what is your take on the recovery pace for Malaysia?
All right. I hope this kind of crisis will not becoming a new norm. Maybe as I said, working in the office will be a new norm, but I don't want this kind of crisis to become new norm. So we need to target or to address the root cause of the problem. Why we are not that resilient? Why when this pandemic happened, we are easily affected economically, financially? Why can't we be more sustainable? And because of this, there's a need to look into the fundamental, look into the monetary system, perhaps to reform some factor of it. For example, when we're talking about our own currency, our ringgit Malaysia has been experiencing depreciation. The purchasing power has been reducing year by year. And because we are actually using fiat money, meaning that it has no intrinsic value. It's not backed by any commodity. But from 1947 to 1971, last time the major economy in the world, they have this Bretton Woods agreement where they peg their currency to gold. But I'm not saying we should peg ringgit to gold, but I'm saying with the soon to be introduced, the introduction of CBDC, central bank digital currency, by many central banks. In fact, our government currently having this project, DAMBA project with South Africa, Australia and Singapore to look into how they can create this CBDC based on the blockchain technology to facilitate the trading between the two countries. I think this is a good opportunity to start also looking into how this cryptocurrency backed by the government, so we can call it a sovereign money, to also be backed by commodity. Not necessarily gold, like I said, maybe our palm oil, maybe our rubber. So then when things like this happen, we can overcome it fairly easily.
Right.
So, and another factor, we are too dependent on debt-based economy.
Yes.
So what we need to do now is to start moving towards Sharia compliant or Islamic financing, more equity financing, so that we are diversifying our exposure to this kind of financing, and of course, to do all these things require a stable government, stable political situation, and a leader that can really champion this forward. Because something positive that I can say about Indonesia and Vietnam during this pandemic, they have a strong leader. Political stability. And they can do this. Once we have this, we don't have to worry about Vietnam, Indonesia. Singapore might be worrying about us.
Yes. Okay. Let's hope for the best.
I agree with what Prof. Azam said. We are not going to have a new norm all the times, and we have to identify the root cause of the problem.
Yes.
But if you look at closely, one of the root cause why we are not prepared, the economy was jumped about this situation, is that we, as Malaysian, have not well prepared our economy to work as autonomous economy, which means involving smart manufacturing, smart factory, autonomous factories. So we have to look this situation as an opportunity to look what the Industry Revolution 4.0 can bring, what fintech can bring, how we should train graduates in university to look at the creative side of the economy, and how to develop the future employees, ready skilled employees. Maybe we have to highlight that the importance of education in the STEM, science, technology, engineering, and math. Look closely.
STEM education.
Yes, we have to improve how students are exposed and keen to go into that education side. And for universities to collaborate with the industry to develop more relevant workers. And that is why when we look at one of the innovation of the economy is blockchain. And what we can see is that we are seeing certain countries adapting to certain cryptocurrencies. For example, El Salvador. But look at what happened right now with the lower prices of that cryptocurrency. So what we can innovate with this situation, yes, of course, the CBDC can give an alternative for the modes of payment online. However, if the people, the public are not ready to accept another alternative, for example, how we look at the use of e-wallets, the touch and go, that's the situation.
I think that's also about the awareness, Dr.
Correct. We have to make the whole people, the public, to trust what is happening, and the central bank to educate the people, the use of this innovation. And then later on, when Malaysians are ready, of course, central bank are already ready because they are working with Bank of International Settlements also to improve the features of the digital currency.
Brilliant. I think speaking of the readiness of public, I think that's what most people will be very interested to know. What is the government is now doing to integrate, just now we were talking about STEM education. So what are other integrated formalities that we have in place from the government side to support us?
Well, we look at how the schools are collaborating with certain industry.
Right.
For example, I've been attending events by Malaysian Digital Economy Corporation. They had this what we call the hackathon, with the students, school, from standard 6, very young students before the pandemic, and there is a lot of opportunity for young people to learn about coding, how to develop an apps. Very interesting.
That's very interesting.
For university itself, right, like Institute of Malaysia,
Yes.
we are keen to improve our education, to improve a lot of innovation, financial innovation, as well as technology innovation.
Right.
Because we cannot stay away from these changes.
Yes.
And we hope that all the industry can help us to develop our programs better.
Right. I think changes are the only constant that we have. So I think moving forward, we need to make sure that we adapt to all these, suggestions that you both gave us and move forward more strongly, and we build a more resilient nation together. So thank you very much. I think we have come to the end of our conversation. Dr. Razman and Dr. Mohizam, thank you so much for all your inputs and exciting and very enlightening inputs from your side. Thank you very much.
Thank you, Salim.
You're welcome.
You are watching the economic impact of the pandemic. We have been discussing a lot about the financial market disruption today. Thank you for watching and stay tuned.